Okay, everybody, it is me, Gregory Mannarino. It is Tuesday, October 4th, 2022. Are you seeing this? Are you watching the action here in the debt market globally? Well, some miracle is happening. I wonder what's going on. Bond yields are dropping, okay? And the US dollar, its relative strength, falling through the floor here. People, look, this is central banks. No other entity is out here buying all of this debt here. Besides them, I mean, it's not me. It's not you. Look, the Fed doesn't have to say that they pivoted, but this is clearly a Fed pivot here. Nobody else is buying all this debt here. A 40 basis point drop in the 10-year yield in like a matter of a few days. Who knows where this is going to go? This is what you and I are going to be watching today. Where is the 10-year yield going? You all know how important this is. There's not another guy out here anywhere who has stressed to everybody how the debt market drives equity markets or stock markets. Nothing else matters in this environment. It's not earnings. It's not PE ratios. It's not forward guidance. It's nothing. It's what central banks are doing to rig the debt market. What we're seeing yet again is it's in our face rigging. I mean, come on now. The Bank of England jumps in here with freaking another round of quantitative easing. You got the UN saying, hey, central banks, you guys better stop. You better halt raising rates because it's destroying the global economy. Duh! Just like it's meant to do. Okay. So this is going to give central banks the green light to buy more, just like we expected. For how many weeks did we discuss right here that central banks, at least I did, and most of you did as well, expected central banks to do something. After the pivot of the Bank of England here, look what central banks are doing. It's in our freaking face. No one's going to talk about it. No one, and I mean no one, is going to talk about the currency free fall that we are in. Let's elaborate on that a little bit. So now that we understand here that central banks collectively, because they don't coordinate. Remember what Jay Powell, putrid, disgusting Yellowstain said? He went out of his way at the last FOMC meeting to say, central bankers, we talk all the time, but we do not coordinate. Of course they do. It's right on the Federal Reserve's own website. I put out a piece of information last week where I showed you that right on the Fed's website, they explain how central banks coordinate to maintain a stable monetary financial system here. Okay, so what central banks are doing is coordinated. And again, look, the mechanism is insane. All right, send billions of dollars over here, another several billions of dollars over there. Let's put forth this act or this policy that's going to cost billions and billions of dollars here. Let central banks get in here and start buying more. What is all this? It's inflationary, people. It's just so obvious. But people don't get it. They don't understand it. They're being duped. They're being lied to. They're being distracted. They're being told to look here when they should be looking over there. We're in a full-blown currency crisis, and this currency crisis is about to get monumentally worse on the back of what central banks are doing. Look, there's always a price to pay. You and I also have discussed here on this blog for years and years since day one, how ballooning global debt eventually, the side effect of that was going to be surging inflation. Again, look, you can't make cash out of thin air, add it to a digital screen, increase the overall pool here globally of various fiat currencies and not expect that at one point these bills, in whatever form they exist, are going to start chasing the same amount or a lesser amount of goods. This is economics 101. But you see, you can't know any of this stuff. So what we're witnessing, at least from yesterday through until this morning, is a phenomenon here where central banks are buying it all of it. And this process here via puppet governments are going to, again, send billions of dollars over here and another several billions of dollars over there. Oh, Bidenstein, by the way, our lovely president, Frankenstein. Another military package for Ukraine here, billions and billions of dollars. Oh, did you vote for that? I don't think you did, but you have no choice but to back it. So anyway, like I said, home of the free. How about home of the slaves, okay? And that's all this is. It's a mechanism to create slaves, people dependent on the system, inflating global debt, allowing central banks to continue to fulfill their endgame. You realize that, right? Every single developed nation in this world right now is a slave to its central bank. And henceforth, while we're seeing what we are seeing now, allowing central banks to fulfill their endgame, and that is to be the lenders and buyers of last resort, you know this, to institute their final solution. And their final solution is to drastically reduce the global population via a meltdown of the economic and financial systems here, only to institute a new system with much more control. Anyway, so let's look back over at this market. On the back of plunging bond yields here, a weaker U.S. dollar, I would expect the MMRI, Mannarino Market Risk Indicator, to fall today. Okay, lovely. We got stock futures higher across the board. Oh, yes. The stock market is orgasmic. It's going to spray its shorts. And you're going to see those commentators on CNBC and Bloomberg and Fox Business all giddy. Oh, look at the stock market going up. While the economy continues to crater. What did we just find out? Manufacturing is dying here in the United States. Inflation continues to surge out of control. People can't make ends meet. Personal debt, household debt, consumer debt surging out of control. I mean, real wages are in a nosedive. But that stock market's going to rip higher. Oh, yeah, absolutely. Look, if this game continues, if central banks really do buy it all, which I believe they're going to continue to do, you're going to see the stock market rip higher very, very fast. But again, the market's going to want to see action here, not just talk from like the UN telling central banks to stop, and more banks. I believe more central banks are going to jump on the bandwagon here, because what do they want to do? This is a backdoor way to allow these institutions to continue to inflate. When the United Nations, a president or whatever it may be, calls on central banks to keep rates suppressed, to weaken the dollar, central banks, they blow an orgasm as well, because that's what they want to do. They want to continue to inflate. And that means they're going to create inflation, and it plays right into the scenario that they want here. It's just a matter of how bad it's going to get. And let me explain this to you real quick. Central banks, if they continue to do this, and I believe they will, buying more debt, instituting more rounds of quantitative easing, all that is going to do is hyper inflate global debt, and the inevitable meltdown is going to be that much worse. And that, again, plays right into what they want anyway. The whole financial system to implode on itself. And then now they can point that. See, central banks here, they're going to shift the blame. They can say, but the UN wanted us to stop. But this world leader said we gotta buy more debt. Of course, look, so they can use this as an excuse, and that's exactly what they're going to do. I think you all know that. It's very obvious. So anyway, Bitcoin back around 20 grand. Gold and silver catching a bid. Crude oil higher. But the drivers here of the market are looking pretty sweet right now. Global bond yields nosediving, and I mean nosediving right now. MMRI dropping, U.S. dollar reversing and going lower here. The market has every reason to blow an orgasm all over the place here, and more than likely it will. But again, look, what does this mean? As I've been telling you virtually every day, and I just covered this in my Markets Look Ahead, all of this is dependent on action in the debt market. If you and I continue to see bond yields drop, if we continue to see U.S. dollar relative strength drop, you tell me, where's the market going? Then you got OPEC plus what? whatever. You get OPEC Plus here talking about how they're going to be cutting production. They want to push the price of crude oil higher. What does that do? It boosts the banks, it boosts the entire energy sector, and the market will get off on that too. Do you see? This is a game. Nothing is what it seems to be. You all know this better than anybody else, and I mean that. All right, people, look, that's the situation. The stage has been set. Let's see where it goes. It's going to be interesting, if nothing else. People, look, please comment, share the video, and another big shout out, huge, to those of you who support my work. You're just amazing people. Love you a lot. I will see you at the end of the day. It's going to be lovely.